Hello guys, welcome back again to another video. Um Tonight it's gonna be my second video because I have a friend of mine that was asking me an interesting question today, and I think it's a nice topic, so we can make a video that can give people some ideas and what is the best thing you should do. And it's gonna be a very interesting topic because a lot of time people don't want to talk about those things. And the topic today it's gonna be about mortgage protection and life insurance. She was asking me, do you think it's a good idea to have mortgage protections for whoever that have mortgages that's watching this video right now? Don't forget to give it a thumbs up because I have good nuggets for you. Okay, so if you have a mortgage, it is important to have what they call mortgage protection. It's not the PMI that's in your mortgage, that's including in your mortgage, but that's gonna be another insurance you have in the side they call mortgage protection. Usually, after buying a house, after a couple months, you'll find companies sending you letters in the mail about mortgage protection if you want to purchase an insurance for your mortgage. So if you pass, then they can pay off your mortgage for you. And a lot of time they have a lot more benefit including in this insurance. But there's two scenarios there. If you have life insurance, I don't think you really need mortgage protection because the thing is, most of the time, the amount of life insurance you have might be able to cover your mortgage if you're gone. A lot of people don't really like to talk about life insurance. They think it's too personal, it's too private. And I can tell you right now, you make a big mistake. Life insurance should be one of the necessities that you have. People don't understand the importance of life insurance, the importance of the same way you put your car insurance, your phone insurance. People put, I have insurance on my phone. You know why? Because my wife always broke her phone. So because I know if I buy her phone, I buy a phone for her, after 2 or 3 months, it might be broken. So if you spend $1,000 on a phone, it doesn't make sense not to have insurance because if the phone broke, then you're just gonna pay $150 most cases or $200 and you get a brand new phone. So for me, I don't I don't ever broke my phone, but just because of my wife, I usually buy phone insurance. So you very very protecting your phone. You're protecting your phone a lot. So you worry a lot about protecting your phone if it's broke. You worry a lot about having car insurance if you're in a crash. If somebody hits you, or if you hit somebody, you want to make sure those people you have coverage to cover those people. And the other thing, people take insurance for everything. You buy a TV, they ask you if you want a protection for the TV for 2 years. You buy a microwave, they asking you if you want that. But what about your life? Especially if you have kids, if you have a big family like me, you need life insurance no matter what. Life insurance should be one of the necessities that you have and all the bills that you have. The reason why I say that, people don't really understand the importance again of life insurance if you're gone. And a lot of companies today, they offer what they call living benefit. So, for instance, if you have a life insurance and there's some kind of sickness you have, it can be a great tool for you to benefit from what they call living benefit from your life insurance. Okay, so it's important to have life insurance. There's multiple type of life insurance, but I'm gonna focus on two type of life insurance you should consider to get. The first one will be um, term life insurance. Term life insurance, it's a temporary life insurance that can last you up to 30 years. Some companies offer even 35 years. I have a term life insurance. Okay. So the term life insurance cover you for mostly 30 years. So for instance, if you're 20 years old, it doesn't make sense to have a whole life because you don't know what's gonna happen in the future. Are you planning to have a big family? Are you planning to have one kid or two kids? Or are you planning to have no kid? Or are you planning to have five kids? It's gonna be up to you. But if you go ahead and take a whole life insurance, maybe it's not going to be enough money to cover all your expenses when you're gone. Because the main reason why people take life insurance it's to make sure you leave your family on a very good spot. So if I gone right now, my kid's not gonna be rich, but at least they have something so they can get by for a couple years. So this is what this is how the math work for life insurance, and my understanding. If you have a job that you're making $30,000 a year, well, it depends on how much bills you have. You should take at least 10 years of what life insurance, 10 years of annual income. So 10 times 30 is $300,000. But it don't work in most cases because let's say you have a mortgage for $300,000, right? And let's say you have two kids. So if you have an insurance for $300,000, then when you're gone, they have to bury you and they have to pay for all the costs that's related to your bereavement. So that's not gonna be a lot of money left. Maybe you might left with maybe $200,000. Okay. So if you left with $200,000, it's not gonna be enough to cover the mortgage. Now, if it's not enough to cover the mortgage, well, you're gonna leave your wife in jeopardy with the house and the kids, especially if they're small kids. They have to go to college, they have to do certain things, right? So now it's important to do that math. So you have enough coverage to cover your mortgage, and then you have at least 10 years worth of living for your family. So if you used to make 30,000, then after that 300,000 for the mortgage, you take 10 times your annual income to cover for 10 years worth of income while you was alive. So if you used to make 30,000 again, then you're going to need 300 more $1,000. In that case, you might need an insurance for $700,000 to be in the safe spot. So if you go on, at least your wife have enough money for 10 years to get by. When she pay off the mortgage, she have $300,000. The kids can go to college. They don't have to, take a student loan. So even she keep working, but at least she have enough money and decide to pay for maybe 2 or 3 years worth of college for depends of what they're gonna study. All right. So sometimes people think when you're working you have life insurance in your job, or you have, oh yes, I'm fine, I have life insurance, I don't need more, I'm okay with that. It's not okay. Your life insurance in your job, it's a temporary life insurance. Why? Well, the reason why it's a temporary life insurance, let's say it's a perfect example right now. How many people that get laid off from the job? How many people that get followed? Or in another word, get fired from the job? Well, it doesn't matter if you was in that job for 30 years and they let you go, then your life insurance now doesn't mean anything. You don't have it anymore. It's gone. Imagine when you start working, you was 25 years old. So you don't take advantage of having a good life insurance if it's a term life or a whole life, whatever you think is the best fit for your need, and you just rely on the life insurance you have in your job. Here we go now, you lose your job at 55 years old, then you're thinking about life insurance is going to cost you 4 times the amount. Does that make sense to you? Because if you're working, while you're working, your life insurance it's active. So if something happened to you, God forbid, while you're working, then you have coverage from the job, and usually is the annual of payment. How much money you make on a year, that's how much they're gonna cover you for life insurance. If you used to make $20,000, you gone, then the job will give your family $20,000 to, do your bereavement and stuff. But is $20,000 gonna be enough to cover your expenses? Is $20,000 gonna be enough to pay for your mortgage? Make sure your kids have enough to survive. Make sure your wife don't have to scramble too much if you're gone. That's not a good idea. That's the reason why life insurance should be a part of your life. It is an important thing to have. The same way you make sure you pay for your mortgage, you pay for your water, you pay for your phone and other expenses, you should be considered life insurance as the same tool that you have. You should never let that go until you're gone. Because life insurance can be a great benefit for you. Life insurance is a good thing to have no matter what your situation is. How much money you're making, it does not matter. You're making $25,000 a year, well, take life insurance for how much you can afford. If you take a term life insurance at a young age, you can pay $30, $40, $50 a month. Depends on how much coverage you really need. So to come back for the mortgage protection question I'm going to answer right now, to my understanding, if you have life insurance, you have enough coverage. As long as you have double of the amount of you owe in the house, you don't really need to have mortgage protection on top of the life insurance. So in another word, if you owe $200,000 in your mortgage, then you have a $400,000 or $500,000 policy. You don't need to have mortgage protection because you have enough to cover to pay off the house. All right. So that's my point with that. Life insurance, guys, should be one of the things that you need to have. It's a must. There's no question about that, because there's too much things happening in the world today. If for God forbid anything happened to you, you really don't want to leave your kids in a situation where they have to do a GoFundMe to bury you. That's gonna be very bad and look ugly and the eyes of the society and the eyes of your family and even in your spirit. How would you feel? You used to be a hardworking man, a hardworking woman, and you have a nice family. You have 4 kids or 3 kids, whatever amount kids you have, how many kids you have, and then you're gone. You don't have anything to help them for the future. You don't have anything to at least support them for a couple years if you're gone. That, I think that's kind of silly if you don't think about having a life insurance for your family to make sure you are protected just in case something happen. Because what happened is when you're in a car accident, the first thing the police officer asking you, car insurance and registration, right? Driver's license. Well, when you're sick, who's gonna ask you for your life insurance? Nobody. But if you don't have it, how much trouble you're gonna leave your family in, how much debt you're gonna leave behind for your kids to taking care, and that nice house you have right now, because you're gone and there was no life insurance, then they cannot afford to pay for it. They have to let it go, and then they're gonna have to move to an apartment. They're gonna have to do something. And if you had life insurance to take care of that, then they don't have to go through all those pain. it makes a lot of sense to have life insurance. You don't have to take $1 million life insurance to feel secure, but as long as you can take at least 10 years worth of income to cover your family while you're gone, I think that's a good start. So if you have, let's say you have 3 kids and your last kid is only 10. So if your last kid is 10, then you have 10 years worth of income. At least by the time that kid turns 20, you have enough money right there to do whatever they have to do, and then they can be able to start working and make their own money. But at least you have a start for them, you have a beginning for them. They don't have to struggle too much when you're gone. Life insurance is very important to have. If you're younger, I suggest to have a term life insurance. Depends on the size of your family. Because when I took life insurance, I took a term life insurance. So maybe a couple years, my life insurance gonna be expired, but at least I took it just in case something happened to me. And the other hand, I have a whole life insurance, and a whole life insurance might not be as much money that I have in my term life insurance, but I do have enough to cover me just in case something happened to me. So if you're older, let's say you're more than 30 years old, then you want to take life insurance. Maybe it makes more sense if you're getting close to your 39, 40s, you might need to think about whole life insurance. And if you're over 60 years old, then you might need to consider having what they call final expense insurance. So what final expense does, it's only cover you if you're gone. So whatever, maybe let's say you need $15,000, you think $15,000 is enough to bury you, then you take a policy for 15,000. That way your family don't have to, scratch their head if you're gone. If it's unexpected, then you're ready. So that's my idea about life insurance. I think it's very important to consider that as a part of your living expenses, to make sure you have life insurance for your life insurance for your wife, your kids. You don't have to take whole life insurance for your kids if they're younger, but you do need life insurance for them for quite a bit of time, because you don't know what might happen to them. The same way you're thinking about yourself, think about them too. So then if something happened, you're covered. So maybe you can take life insurance for your kids until they turn 15 or 18 years old. And when they turn 18 years old, they can go ahead and take their own life insurance, and life move on. But at least you cover them when this little, so if in case something happen, you have enough to cover you. So if you think life insurance is not a good thing for you to have, then you might need to think about having mortgage protection, like I said before. If you have a mortgage, then you know for sure you need to make sure that mortgage is paid off for your kids when you're gone. Then you can take a mortgage protection. You can call your servicer. They always have companies they work with. They can always refer you to a company that does that, and then you can have mortgage protection just in case something happened to you, so you don't have to left in the dark. Because it's very ugly when you're dead, and you don't have nothing left behind for your kids. They're gonna go struggle, especially if you have very young kids. And when you're gone, everything is changed. The life changed completely. Your wife gonna have to do 2, 3 jobs. It's not fun to have 3, 4, 5 kids and you don't have anything saved on the side for them while you're living. So if you know you need to drive a car for $50,000, you think that's a priority for you? I think it's a wrong idea. You should think about having a life insurance that can have $50,000 saved, and you drive a car for 10,000 or 15,000. So now you know for sure if something happened, at least you have 50,000 in the side. Then they don't have to go crazy too much. Then in the future, when you things get better, you can always upgrade your life insurance. You can always upgrade your car. But remember, as you're getting older, life insurance get more expensive, get more pricey. So think about it while you're young. So when you're getting older, it doesn't become a burden on you. So that's all I have for about life insurance and mortgage protection. It's important to have mortgage protection. So mortgage protection is very, very important to have. So think about that, and don't forget to give this video a thumbs up if you think there was a lot of value in it, and also share it with your friend and family. A lot of people that watching this video, they do not subscribe to my channel. Please give me a favor, do that for me tonight if you haven't do that, because YouTube can help sharing my videos with you whenever I upload a new video, so you don't left behind in all my good content. Thank you so much for spending the time listening to me and watching my videos tonight. Thank you very much. Have a wonderful night. I'll see you all in the next video. Thank you.